Okay, let's take exactly this point forward. Should you be renegotiating your rents lower or not, given the demand-supply mismatch currently within the real estate space? Joining us right now, PV Subramanyam, CEO at subramani.com, and we also have with us Prashant Thakur joining in from Anarock. Gentlemen, morning. Good to have you both on the show. Prashant, if I could start the discussion with you. We've discussed in depth about rental renegotiations, rental waivers that a lot of commercial establishments have taken during the lockdown. But today, tell us about what is the scenario that is currently building on when it comes to the residential real estate segment. And are you seeing renegotiations happen there as well?
Good morning. I think I have been saying that it's the buyer's market when it comes to residential. Now I think it's tenant market when it comes to rental. And yes, we have been seeing the lease renegotiation happening, and a lot of move-outs are happening in the gated community and societies. But the move-ins are very less, and there are a couple of factors that are based on which this trend is happening. A few of the IT and ITS companies have issued a very clear guideline for work from home policy, and both of them have clearly communicated to their employees that by March next year you can work from home, and that's where the tenants have taken a call that look, anyways the schools are happening online. Let me save some part of on rental. So two things are happening: either they are kind of going back to their native place from where they can work and the kids can continue their schooling, or what they are doing is they are moving from a high cost rental apartment to some low cost apartment at the outskirts, because normally what we do, working people, what we do is we tend to stay near to our offices, and obviously the rentals are quite high on that side. So this is one case. Now what I have also seen is that once the lease is coming to an expiry, the landlords are not escalating the rents, and there are a couple of reasons. If you look at the way the society have increased their maintenance charge, because now they have to incur extra cost in maintaining sanitization, hygiene, they have to install those thermal scanners and all those stuff. So the maintenance part has also gone up. So the tenants are giving this argument that look, the maintenance cost has gone up, the salary has been kind of depressed, and then landlords have also realized that if tenants move out during this phase, it will be very difficult to find another tenant, and they will have to continue paying the maintenance while the flat is empty. So nobody wants to incur a loss in this uncertain time. And yes, they have brought down the rentals, and I've seen this trend, especially in IT and ITS driven cities like of Pune, Bangalore, and Hyderabad.
Mr. Subramanyam, is it only fair that the residential rentals as well come down? And is it time that all of us need to renegotiate our rents?
Well, I don't think real estate is just has to be singularly, singled out and said that rents are coming down. There's a rethink on everything. Look at the number of relationship managers a bank needs, or on everything there is a rethink. So companies are reducing the number of people. So if there is a boy or a girl who has come from Bangalore and working in Mumbai, she's just leaving Mumbai and going. So the number of people seeking is going down. So all the more reasons why it will go down. So should you renegotiate? Depends on demand and supply, right? So if you are stuck to that place, normally what happens is people are stuck to the school where they are going, their office, etc. And these things happening online is a temporary phase. But if you think it's going to happen for 2-3 years, then you should renegotiate. But otherwise, you should be willing to walk the talk and say, okay, if you don't give me a better deal, I will walk out. So depending on the guy, on the landlord, how much time he has to wait, he will renegotiate. So if you are paying 25,000, you will come down to 18,000. But from 250,000, you may not come down to 180,000. At the higher end, maybe the negotiation will be more difficult. However, a lot of expats are leaving. So you have the higher premium segment also coming in for renegotiation. So yeah, you should renegotiate, but you have to be reasonable, and you should know his weakness and he will know your weakness. So if he knows that you're stuck to that place with proximity to your parents' house, your office, your schools, children's schools, he knows, then you won't renegotiate too hard. So yeah, it's a give and take, just like salaries. It is getting renegotiated, right?
Yeah, and thank you for being so honest. So Prashant, we are not getting into where the future trend is. Let's address this question, and I'm going to ask a simple question. I live in a rented house. I do. Should I call up my tenant and say, it is time to renegotiate because property prices have been flat, property prices are unlikely to go higher, and there needs to be a benchmark at which rental lease needs to be calculated. So what we are trying to understand, Prashant, is there a logical, a viable, and perhaps a mathematical and a fundamental case for rent owners or for tenants to go to the landlords and negotiate deals? And you got to be honest here, Prashant. I don't know if you live in a rental house or not. I do, so I need that answer.
So I'll be very honest. I definitely live in a rented apartment, and my landlord proactively approached me and said, "Like Prashant, your lease is coming up for renewal. We can continue with the old rent." So this is, but I'll tell you why. The landlords are being proactive in cities like Mumbai, or let's say in localities where rentals are already high. So if you look at the rental markets, they are highly skewed. They are very specific to a particular locality. For example, let's say if you have to rent something near BKC, where the office might be, the rentals would be high because again, demand supply scenario. Now, in a market which had a history of inflated rent, and now you're looking at a trend where people are willing to relocate to a peripheral area where they can afford a bigger house. And this trend is going to continue for almost 6 or 7 months. We don't know for how long, but there are certain jobs that definitely will continue to work from home. Let's say, the way this commercial space is also spanning out, that they are also planning to have these satellite offices, which could be near to the employees' accommodation. So this trend is definitely going to kind of take greater momentum, and that's where people have realized. People are now willing to kind of experiment and move out to the peripheries. And then in this high cost maintenance era, where I said that if I'm a landlord in Mumbai, and then let's say my society charges a monthly maintenance of 10,000. If my flat remains vacant for 2 months, the rent escalation that I would charge and benefit gets wiped away. And I don't want to take any chance in this uncertain environment, and I would not like my flat to be vacant. So the tenants also understands this, the landlord also understands this. And I would agree to Mr. Subramanyam that there are certain apartments in society which has a good which are in good localities, and then the tenant might want to stick to that. So at max, what they are doing is that they are kind of approaching the landlord and saying, look, we cannot increase the rent. Let us stick with the old contract. And this is happening across the board.
Mr. Subramanyam, I go back to that very basic point, which is that should there be a benchmark of how residential yields they need to be calculated? I'm not walking the path of commercial because that's a separate calculation, that's a separate maths, that's a separate assumption. In tier 1 cities and tier 2 cities, is there a benchmark one should use to establish what is the fair rent? 10-15% premium, like you said, is a function of locality, society, friends, family, proximity to the garden, proximity to the office. I'm keeping that separate. But if one has to use a benchmark, is it 3% of the total cost of the property? Is it 4% of the total cost for the property? Is there a benchmark you would suggest?
I really don't know, because unlike equity prices and bond prices, which has got a fantastic price discovery mechanism, real estate does not have a price discovery mechanism. So in the same location, a Hiranandani flat, a Raheja flat, or a unknown builder flat, there is a 20-25% difference. So, and also rental yields in India make no money at all. There's no way how REITs in India will make money. So, right, if you're getting 2% or 3% in a country where 6% is the GSEC rate, I don't see any reason why rent should come down. In fact, I think the property prices should come down, and then these rents will look reasonable. So it's a huge demand and supply situation. And largely real estate buying is driven more by ego and societal needs rather than by commerce. So people just go and buy a place because there is pressure to buy a space. So I don't think demand and supply really works. And there is, I mean, like I said, there's no price discovery, right? Infosys has one price because there's a market quotation. Here there's no price discovery. So depending on your knowledge level, your ability to negotiate, whether it is a furnished flat, who is bearing the society charges, based on all this. So I don't know whether, because I see in Navi Mumbai rental yields of about 1% today. 1% doesn't make any money at all for the landlord. Why should he do this? So I don't think there can be a formula unless we have a fantastic price discovery mechanism of rent, which is possible because rental agreements are being registered today, and real estate deals. If everything is being captured very well and somebody like HDFC comes out with a rental index and a real estate price index, then we can put with the base data missing, putting a formula makes no sense.
Prashant, based on your observation over the last few months with this whole shift to work from home, job losses, salary cuts, etc., what is the outlook, particularly on the new property construction? Are we going to see fresh supply coming to a halt?
I think fresh supply will come to a halt because our construction industry needs some consolidation. Small builders are anyway getting squeezed for margins, so many of them will drop out and they will sell out to the bigger ones. So I think the similar thing which happens in every industry, the squeezing out of the smaller guys and survival of the bigger guys will happen. And till that happens, and also understand that the rental market is very, very unorganized. So an 87-year-old tenant who's got a landlord who's got a tenant for 4 or 5 years, he's not going to renegotiate too hard. But a younger landlord may be more aggressive. Are there enough people willing to buy and just put it on rent? I think that population is also shrinking. So I think in suburbs like Navi Mumbai, etc., there is excessive supply. But in some other areas like say Chembur or Agarpupar, which are again not the most expensive of suburbs, there is not enough supply. So maybe if supply comes, there will be demand. But yeah, in places like Navi Mumbai, there is just not enough demand. So I think you'll have to go suburb to suburb. Like Dadar, there is absolutely no supply coming in. So maybe whatever comes up will get lapped up. But in Kharghar, there is just supply and no demand. So you will have to go suburb to see how much of supply will come and how much of it will get lapped up.
Prashant, posing that same question to you, bases your observations as to how things have changed over the last few months in terms of new property construction, pricing in cities, is it going to be a given that fresh supply will come to a halt?
In fact, fresh supplies have already come to a halt. It was not because of this pandemic, but before this pandemic, also from last 13 consecutive quarters, what we were seeing was that the sales were more than the number of new supplies that were coming in, and this was happening because of a couple of factors. Number one was developers themselves took a proactive call of focusing more on completion, because that's where the pain point was. The buyers were seeing a lot of unsold inventory, construction not happening, and that was impacting the sentiment of the overall market. So that's where the supply was kind of proactively curtailed, and also the supply was curtailed because of financial constraints. Now, if we look at the first half of this year, I think almost 50% of the supply has come down compared to its peak. And then the sales, if we look at the numbers during this post-pandemic, the way that they're picking up, my sense is that if we are able to hold on to the fresh supply for another 2 or 3 quarters, and the sales keeps its momentum, we would definitely see a revival in this sector, and that's when the new launches will start to happen. And we also need to keep in account that the new launches that are happening currently are by grade A developers, where the buyers are placing a lot of trust. And if you look at the buyer's preference right now, the clear-cut indication is that they want to stick with ready-to-move-in inventory or a project that is nearing completion. And that's where the developers have aligned their efforts in completing the unfinished projects rather than focusing on launching. So yes, the supply will be constrained for a few more quarters because of the proactive call and the financial constraint. And that's when we reach an equilibrium. So hopefully, I think, in my opinion, the green shoot that we are seeing, and if the sales momentum continue for this festive season, I think recovery would be around the corner.
All right. Gentlemen, appreciate your time. Thanks very much for joining in and giving us a little more clarity as to what the outlook is when it comes to residential as well as commercial real estate and the outlook on the rental rates.